Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Stock of the Day is Pacific Smiles. Now, Beam Dental, which is the vehicle owned by Genesis Capital, has extended its takeover offer to acquire all shares of Pacific Smiles. That offer, announced last September for $1.90, will now close at January 30th. The board of Pacific Smiles having accepted Genesis' offer. So that's a moot point. Nonetheless, if you hold those shares, do you wait? Do you sell? What's the best strategy? That's often a point we discuss here on the call as to when you've got a takeover offer. Luke, how are you seeing it?
Yeah, well, I mean, in this example, Andrew, it's trading at that $1.95. The market, it's going through. There's no sort of question marks around it. But yeah, I think it is a good opportunity to talk more in general about that strategy, because people are forecasting for increased M&A into 2025, and there's certainly a few drivers of that. You hear about a lot of dry powder from private equity, some depressed valuations in pockets of the listed market. So what do you do? I mean, I can only speak from experience. If you see a spike from a takeover, I am generally a fan of taking some off the table at that point, maybe not a whole position. And then a lot of it comes down to, your view of the competitive position of that business and the likelihood of further bids emerging. So, in this example with Pacific Smiles, I think the original bid was for $1.40 from memory. And then a competing party ended up driving up Genesis Capital / Beam to $1.95 in the end. So, if your view of the company and the, competitive landscape is that there's the potential for those competing bids, you certainly want to be exposed to that as much as possible. But, look at stocks like Ramsay Health Care as an example. When these takeover offers walk away, shareholders, they usually walk away for a reason as well. Shareholders are often left, in a fair bit of pain in the time afterwards. So I'm a fan of taking a little bit off the table, get some liquidity, look for new opportunities. There's always some out there. But, if it is one of those stocks where you think other bids can emerge, keep some exposure to it and stay patient, because you can often see that sort of bidding war that we've seen here for Pacific Smiles.
Ben, what's your strategy in these situations?
Yeah, it's probably one for the arbitrage funds who are kind of specialists at, determining the risks, whether it be the Foreign Investment Board or the ACCC or any other kind of legal issues that might make the risk-free return disappear if the bid falls over. So yeah, I mean, if you're looking to hold for that extra few percent, then it's probably worth holding on to. But if you want to redeploy and think you can generate a higher return than the arbitrage funds, who are typically targeting a 8 to 10% return, say, then it's probably one you'd move on from. Having said that, it's one of these ones where, as Luke said, if you can find the competitive tension. I recall Mainstream MAI. I was in a few years ago where it got a takeover bid at $1.20. And the stock was kind of trading slightly above that and drifted below. I think I picked up a few shares at $1.18, $1.19. And then there was another bid came out and a furious bidding war, and I think it ended up $2 or even higher potentially. So you can make money out of these situations, but I don't really have any value to add in terms of whether there's going to be another bid. I think it was kind of a struggle between the private equity. Genesis locked up a 20% stake and then voted down another bid, and then now they've kind of secured the major shareholders' votes and locked up the bid. So probably nothing to see here now. It's interesting because private equity tends to kind of look for these roll-ups. I think Healthier was another one with physio clinics where they can extract some financial synergies and buy into a network of clinics that's kind of difficult to replicate. So yeah, it's kind of a reflection of the M&A environment. We're seeing quite a few bids. I actually wrote an article on Livewire recently, and Pacific Smiles does obviously tick the boxes, which is why it's been taken over. But yeah, I don't think there's too much left on the table here.
So you would sell it then at this point?
Yeah, it'd probably be in the same boat as Luke. Probably take some off the table, maybe selling it in its entirety.
Okay, well, if you are in it, you've got a couple of weeks to make that decision, I guess, but both leaning towards taking some of that profit before it closes out. That is our stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at ig.com.